Hello, everyone. Welcome to another edition here of Tip Tuesday. Geoffrey Nance here with you. And today's topic is handling and dealing with volatility. I think in general, most of us would say, most of us, not all of us, but I think most of us would say that we kind of prefer a routine within reason. At least, from day to day, we would prefer a routine. So, in general, when something pops up, it kind of throws us off like, hey, this isn't, exactly what I had planned for today. This is different, or this is frustrating, or I can't believe I got to deal with this. And so I think in general, we don't necessarily like things that just kind of pop up or things that are different or when things are volatile. And when it comes to our trading, there are times when we are going to endure a volatile market where things are just kind of popping up, where things aren't really going the way that we had planned. So the question is, when times like that occur, and they most definitely will, how do I respond? Well, they did a study several years ago, and they went to try to find out what kind of people. So what profession tends to perform better in the market? So from non-professional traders, what kind of person, what kind of you know occupations tend to do better than others when it comes to trading? And what they found is that nurses tended to do well with trading. That they tended to be near the top, nurses. Okay. Now I'm going to come back and I'm going to talk a little bit about why I think that could be the case, and then we're going to talk about how that impacts you and how it all ties into volatility. So I guess the next question is, if nurses did the best, who do you think, guys, did the worst? All right. I'll let you ponder that for a second, but then I'll tell you the answer. The answer was engineers. All right. So now the obvious question here is why? Why did nurses tend to do well and engineers tended to do poorly? And does that mean that if I'm a nurse, I'm going to be a good trader, or if I'm an engineer, I'm going to be a terrible trader? It does not mean that, but it does mean that you are going to have some significant hurdles to overcome, and then some maybe built-in benefits depending on which one you are or where you lean in those two categories. Because you might say, well, I'm not anywhere close to either one of those. Let's talk a little bit about the engineers and the hurdles they have to overcome. An engineer, they spend a lot of time thinking, analyzing data, trying to get everything lined out just right. I mean, they don't really have a chance to go back and be like, let's, see if this building actually stands. I mean, they got to go through multiple, maybe revisions, but they're working on something. They're getting insight, they're getting input from other people, and they're like, all right, is this going to hold? Do you see any issues with this? So they build up this plan and they invest so much in this plan that they expect the plan to work. And I think that when the plan doesn't work, it just kind of messes them up, and they just really don't know what to do with that because it was supposed to work. Like, they invested all this time, all this effort into making this plan. Everything was supposed to be aligned perfectly, but now something is messed up and it's not working. And then rather than just respond to that, they then go into overthinking mode again. Well, what did I miss? What did I not understand? What do I need to do again? So I think they just start thinking through everything rather than reacting to the trade. So they stay in that trade. They watch it move against them because I think in some ways they're still convinced the plan was solid enough where the plan should have worked. And then they end up taking bigger expenses than they should have, simply because they're still committed to the idea that their original plan was right, their original plan was good, and then if they'll just stick with it enough, it'll work. And then they end up with big expenses, and this happens, I think, regularly. Now, when it comes to a nurse, nurses have plans too, but there are certain things they're supposed to give at very specific times. So in other words, they have a system, right? So you go give this person with these symptoms this medicine, and then this ought to happen. So you go in at this time, you do this. You go in at this time, you do that. All right. And so when you do this, this ought to happen. So I think they have the routine, they have the pattern, so they know what is expected, and then they just go do it, right? Because they're already set, like, hey, I do this at this time. It's the time to act. I go do it. But if something goes wrong, they react. They react quickly to the problem at hand. They're not overthinking what's happening. They're going, okay, something is happening here. I need to do something about this problem, like right now. I need to deal with this at this exact moment. I need to do something different. Things are outside the norm. It's different than what I expected, but I have to do something here. And so then they react. And I think what ends up happening from a trader's perspective is they have a plan, they have a system, they try to follow that system, but when it doesn't work, they don't overanalyze. They say, okay, let's react. Let's get out of this trade. Then let's think about maybe why it didn't work, or let's get ready for the next one. Because again, they've got multiple patients, right? So they're able to compartmentalize a little bit more and move from one trade to the next and just say, okay, everything is aligned. It's time to get in. I'm going to act. When it comes to timing is really, really important when it comes to trading, especially if you're trying to do what we call swing trading, which is where you're trying to get in at, a bounce up off support and then move up to resistance, or from resistance down to support. Timing becomes really important. Now, you can be a semi buy and holder, you can be a long-term buy and holder, and those aren't nearly as timing specific as somebody who's trying to catch movements from one level to the next, which is what we're trying to do primarily at Tradeway. There are a bunch of different ways to trade, but primarily that's our system. That's what we're teaching. So I think it requires your ability to act and then react. So when you're so convinced that your plan is going to work and you get so caught up in the thought that my plan didn't work, it impacts your timing. It impacts the way you think through it. So, somebody who needs the plan to work is going to be really honed in and then hesitant to act because they need to make sure that they've gone through everything. They've looked at every indicator and they're ready to go. And then something happens and the market becomes very volatile and they're not really ready to react. They're not as quick to respond as somebody who's like, all right, hey, this isn't what I thought, but let me go ahead and react and then adjust. So when it comes to timing, we try to teach folks even from an early stage. And it makes people uncomfortable sometimes because you're like, hey, this opportunity is presented to you. Are you going to act or not? Yes or no? Are you going to act? All right. If you do, here's what happens to you. You get the best price. You get the information. You have the potential to, get ahead of other people that are going to wait. You can go do this trade. You can learn the education faster, but it feels like overwhelming, right? So a lot of times as Christians, rightly so, I think, that we have a tendency, we want to think about things. We want to pray about things. But I think if we're being honest, a lot of times that's just a veiled way of saying, I want to wait. I want to wait. I want to evaluate. I want to think through this. I want things to slow down. The problem with that, guys, is the market doesn't slow down. The market is very fast and the market is constantly moving, sometimes faster than others. Sometimes, it's going up one day when you thought it was going to go down. Sometimes it's going down one day when you thought it was going to go up. And then sometimes it moves a lot. Sometimes, like today, it's moving very little, but things could change. So we talked about even this last night. We said, things are really weird because it's set up to where the market really ought to be going up. It ought to be climbing like 30, 40 points. It just feels like they're just waiting. They're hesitating. The professionals are just kind of sitting there going, yeah, we're just going to wait on something. Well, we know that there's a news report coming out tomorrow morning, and perhaps that is a catalyst that they are waiting on to act. So in that situation, it's okay for us to be more hesitant because the market is being hesitant. Where we have to be careful that we're not being too slow to act is when the market is not being slow to act. So notice I didn't say it's not doing what you wanted it to do or not. The market is going to do whatever the market is going to do, right? So what we have to do is say, all right, am I going to acknowledge what is happening here and then react accordingly? So when the market is clearly moving and it's clearly committed to a position, bullish or bearish, because many of us have the ability to make money if the market goes up or down or even sideways. Am I acting and reacting based on what the market is actually doing? Or am I getting so caught up and this isn't what I thought, or it's not doing exactly what I thought it was going to do, or, oh, wow, I don't really know why this is going on, or, I need to pray about this. Here's what I would say. I think you should pray. But I think you should pray before the market opens, right? And I think you can pray after you get into it, and I think you can evaluate it. But I think what we need to do is have a willingness to say, this is a system, I'm going to act. This stock is at support. It may not work, but the system says get in at this time, prescribe this medicine to this patient at this time. All right, I'm in. Okay. Does it work? Cool. What am I going to do? How am I adjusting? How am I adapting? This thing is working. I'm in. Cool. It's not working. All right. What am I going to do? How am I going to adjust? How am I going to adapt? What do I need to see? Do I need to reach out to coaches? For a nurse, do I need to call the doctor in? Do I need a consultation, or do I know how to handle this? Those are things we need to consider as well. Okay. Is this a time when I need to ask for assistance, right? That I need somebody else to give me their insight as to what's happening. That's okay to do too. Okay. In fact, that's advisable. The Bible even talks about the importance of many advisors. Okay. But we also can get to the point where we have so many advisors, right, that we don't act. Now it causes us to be slow to act, which is the exact opposite, right? So the ability to say, okay, the market is moving. The market is moving quickly. Am I moving quickly? Or am I kind of stuck in quicksand and just watching things happen all around me? We want you guys to understand that volatility is not bad. In fact, volatility can be good if you're willing to take advantage of it. Does it make any sense to say, oh man, that trade made me money faster than I thought it was going to make? Like, that sounds fantastic, right? I made money faster. That trade did what I thought it was going to do, but it did it in 2 days as opposed to a week or 2 weeks. Fantastic. That's volatility. That means I'm going to be able to do more trades in the same amount of time. So volatility isn't bad, but volatility is different. And we have to have a willingness to adjust, a willingness to adapt, a willingness to react. So I want you to have a plan, guys. I don't want you to hear this and say, I don't want to have a plan. The whole thing is based on a system, right? It's based on patterns. This ought to happen at this time. Definitely want you to do that. Definitely want you to pray. But I want us to get things in order. And then I want us to be able to react when it's time to react. And I believe that when we do this, when we understand the market is volatile, the market is moving, sometimes faster than others, my willingness to get in there and participate in the trades that are available at that time is going to play a big factor. Okay. It is a huge factor in whether or not I'm going to make the trades and therefore the money, the profit that I would like to be able to make. I think you can tie it in directly to your willingness to act. Is the trade going my way? Is it not going my way? How am I reacting to this volatility, to this movement in the market, to this movement in my particular stock? How quick am I to act? And if you find yourself saying, you know what, Geoffrey, I really struggle with that, then that is a good opportunity for you to reach out to a coach, right? And say, hey, you know what, how can I get better at this? And I'll tell you, guys, an answer. And it's really simple, really is. The simple answer is to trust the system and to hone in on the types of trades, the types of patterns that are most likely to work, and then to stick to your plan. And if that plan is broken and you have a willingness to get out, then that's a really good thing, because you can always evaluate later. But trying to evaluate when you're emotional is not ideal. Trying to trade when you're emotional is not ideal. Okay. So let's do the evaluations afterwards, but let's be willing to react. All right. So let's know what we should be seeing. Let's acknowledge when we're not seeing that, and then have a willingness to act as we should and react as we should based on what is happening with our stock or with the market. And let's not see volatility or, things that just kind of pop up or things that are different than we expected necessarily as an inconvenience, but as an opportunity to say, you know what, how am I going to respond here? It's an opportunity for us to say, you know, how am I growing as a trader? Am I treating this better than I did 3 months ago? Am I treating this better than I did a year ago, 3 years ago? How am I dealing with these conditions that are presenting themselves in the market? Because again, we're on a journey here and we're learning as we go, and hopefully we're growing as we go. So don't see volatility as a bad thing, see it as a good thing, but it's going to force you to act and react faster, and that can actually be a good thing for you. Well, that's our tip for today. Thanks for joining us, and we'll see you guys next time.